Hello viewers and welcome to it. This is your weekly dose of Economics 101. Thank you so much for sticking with our programming here on ZBC TV. Now, Zimbabwe, like any other global economy, has not been spared from the rise in inflation that has seen global banks tightening monetary policies as well as raising interest rates to curb soaring prices. The Zimbabwean industry has not also been spared from the reeling economic sanctions that have groped the nation and have seen a lot of local industries closing down. However, the coming in of the Second Republic with engagement and re-engagement mantra has seen positive growth in the Zimbabwean industry, with investors coming in to reopen some of these closed industries. Now, some of the anchor industries that we have seen with regards to development as well as advancement include the mining sector, the agricultural sector, as well as the farming sector. We have a huge appreciation of that, as we have seen recently that a lot of activities within the mining sector have seen a revival of big firms like Zisco Steel and the opening of the Manize project. Be that as it may, all these developments seem to be overshadowed by the looming drought and a failing crop. To help us unpack all this and more, and obviously give better insight with regards to this stirring conversation here on Economics 101, we welcome you, Mr. Trymore Mhlanga, who's a seasoned banker.
Thank you, Ketley. Good day, viewers.
Absolutely, and such a pleasure to be having you in studio. And we are also joined by a miner and industrialist, and this is none other than Mr. Simba Chinyemba. Thank you so much for joining us, sir.
Thank you for having me, Ketley. It's a pleasure to be here.
Most definitely a pleasure indeed to be bringing you to this program, Economics 101. And perhaps as we start by interrogating this a very pertinent issue, I'll begin with you, maybe with you, Mr. Trymore Mhlanga. What can you say needs to be done in order to stabilize the exchange rate that is in particular attention to the monetary policies, as well as what we've seen with regards to currency in Zimbabwe in view of the impending monetary policy statement?
Thank you, Ketley. Yeah, so to just say from the onset, I think the monetary authorities rather, they're walking a tightrope. Currently, not an easy feat. So we have seen the exchange rate. I think in 2024 has started off not so good. Yeah, it can take any form. There are various options, but perhaps at the core and center of this could be issues around the multiple exchange rates that we have in the environment. I would say that's the center of the market distortions that you have. To give some brief insights and background, so you see we used to have the auction market determined rate. Currently there isn't much activity, if any, on the auction market. We have the willing buyer, willing seller market. So linked to that, the interbank rate, which is the official one. And then at the other end, we then have the alternative market one. Now, I would say perhaps key to stabilizing the rate, because it's not about the absolute number when we talk about currency and exchange rates. It's about the movement thereof, where you have the rate being around 5,000 in December, and currently, as we're speaking today, say around 17,000 on the official market. That's a more than 200% movement, perhaps close to. I didn't do the math, you pardon me, but 5 to 17. It looks to me more than 200%.
Quite a huge step.
Yes. So perhaps what we could do is liberalize a bit more that market, and then also come up with a proper market determined exchange rate. Where you look at the other metric, which is also quite key in the pricing in Zimbabwe, is around the 10% margin that you see mostly with the retailers. Now they are mandated to give a margin of something in the range of 10% on the market rate. Now, when you look at it, it's not optimal, and it will always trail the alternative market rate. So if you have 17,000 versus alternative market around 20,000, you put 10% on 17,000, you don't get to 18, you are around the 17s. So customers going to the shops, they just do the math, they don't bring in the US dollar in the shop, they deal with the change money guy outside. So it's not easy, but I've had issues around the structured currency. I know our viewers would like to hear a bit more about it, but yeah, I think that one is also, I would say it would be a hybrid whereby we had a gold standard back in the day where you link, but we with all the economies, none of them are now are still on the gold standard. So it could then be a hybrid whereby you have the fiat currency, which is the direction everyone is going and everyone has, just backed by, let's just say nothing, but except confidence. So it could then be a hybrid if you structure our currency that way. Linking it to gold would perhaps help, but so I've given a few options there that could help. Thank you.
Okay, and yes, quite a mouthful of a response.
Yeah.
Tying that in, perhaps I'll move to you, Mr. Chinyemba. You are into the mining sector. We are aware that, like Mr. Trymore Mhlanga has rightly put, we are talking everything to do with the gold-backed currencies. Maybe briefly break that down for us and perhaps explain to us how sustainable that has been for this economy to date, also basing on the fact that we are tying a multi-currency system in our country.
Well, I think there's some sense, I suppose, if I got your question correctly, in terms of the sustainability of having a gold-backed currency. Did I get that correct?
Yes, absolutely.
Yeah, okay. Yeah, so because I want to make sure I'm answering the question.
The correct question, yes.
Yeah, so I suppose one might say that it makes a lot of sense because Zimbabwe is a gold-producing nation. So we are trying to put a resource that we definitely know we can produce in order to support a currency. As Trymore said earlier on, which is actually fundamental for me, the stabilization of a currency really relies on the confidence that the economy puts towards your currency. Whether it's a gold-backed currency or it's a fiat currency. Ultimately, it's about the confidence that people put. Now, when you have it backed by a resource such as gold, the confidence is inherent in it because what you are saying is whether you have confidence in me as a monetary policy maker or not, you can take your note to the bank and get gold back. Right. So that gives it definitely some level of stabilization. I'm not so sure whether it gives it a level of sustainability because there is a cost to having that gold. So to a certain extent, there is a cost to continuing to defend the currency by backing it with a particular commodity, which is why you've then seen that the major economies have then moved away from that. Because for you to continue to back it with a physical asset, you must continue to have that physical asset available, and it must be interchangeable. Otherwise, people start losing confidence. So the moment I come to you and I say, I have my dollar worth of gold, give it to me, and you say, well, hang on for 6 months. Time value of money means I now discount the money I'll get in 6 months, and already there's now an exchange rate. So the sustainability for me is, I'm not so certain of it. I certainly accept that in the short term, it may help with the stabilization. But I think as a country, we would need to find our way towards a fiat currency that is backed by the confidence that the economy has in the currency.
Yes. Identifying problems as well as breaking down the solutions. Here with two professionals within the investment banking sector as well as the mining sector. That is Mr. Trymore Mhlanga as well as Mr. Simba Chinyemba. Don't go anywhere. This is Economics 101. Thank you so much, viewers, for staying with us. This is certainly your go-to program for everything to do with the tracking of a Vision 2030, as well as tracking the National Development Strategy 1, as espoused by our President, His Excellency, President Emmerson Mnangagwa. And here, joining us on Economics 101, we have professionals in their own right. We are talking all things mining as well as banking. And perhaps I'll just carry on the conversation with you, Mr. Chinyemba, as we go further. We've seen a lot of activities within the mining sector. We were talking about the sustainability of gold itself being equated to our currencies. However, how is mining as a whole translating and transforming the general livelihoods of the Zimbabwean people?
Yeah. I like that question because obviously I am in mining, and I feel that this is a message that we are always trying to put forward for people to understand how mining is so important to our economy. So I suppose the best way I can answer that question is to give a very simple example. If you go to a town called Zishavane, around Zishavane are a lot of mines. Nearly everything that goes on in Zishavane is related to the mining activities around it. And when mines go down, the town goes down. People leave, because obviously when we employ people in mining, we bring people not only from the community, but from around the country. If there is no activity, people leave and go back to where they are from. Secondly, every person that is employed in the mining industry, more often than not, I would venture to say more than 70% of them, they have a family. Therefore, they are bringing money to the table. There are kids that go to school, so schools open. Hospitals open because where there are people, there is a need for healthcare activities. Further down the road, tuck shops open because now there are people with money in the community. So just to give a very basic example, to say, if you go into a town where there's good mining activity going on, then you actually see that through the economic output of mining, people's livelihoods are changed in very practical means. This is not just a theoretical aspect to it, because people are gainfully employed and they're able to then support the community around them. Now, in addition to that, because I was just talking, I guess, purely about transforming lives directly.
Yes.
There's a huge indirect transformation that also goes on, because where there is mining, there are a lot of services that mines need. We need telecommunication services, we need electricity, the roads need to be built, you need various things to be supplied, infrastructure, right? So all of those things also come to and those industries also support further down people that are employed. And of course, ultimately, it's not just about that local community. Mining constitutes roughly 75%, if I'm not mistaken, of every dollar that comes back into this country, right? And so therefore, the dollar you are using, 75 cents of it came from the activities of mining, right? For you to have it, for you to be able to go into the street and use it, it had to come from outside, because last time I checked, we don't print United States dollars.
Yes.
Right. So it has to actually come from activities, and mining is predominantly an export-based business. So therefore, it is quite essential in bringing the dollar that we use into the country. And finally, nearly every mining company pays taxes in one way or another. Either we pay royalties, we pay VAT, we pay profit tax where we have been profitable. And all that money goes into the coffers of the government, and the government is able to then deploy it around the rest of the country in various programs and economic needs that any government is tasked with.
Oh, yes. Spoken like a true team leader of a mining team yourself. And perhaps to you, Mr. Trust, with basis of your name, let's talk about trust as well as, systems that are in place with regards to this whole mining circulation process that has been espoused by Mr. Simba. Quite frankly or simply, is there enough trust within our banking structures and sectors with regards to some of the money that is made. Let's talk about artisanal, and then we go to small scale, and then we even go to the large scale miners. At every point in time, within the relationship between miners and bankers and banks themselves, is there enough trust that is based for them to come and bank their money or bank their wares or even bank sometimes their minerals? And also have a basis to collect a loan based on the work they're doing.
Thanks, Kathleen. I like how you played around with my name.
Yes,
to throw
trust
in the,
is very
the trust. So Trymore, trust. Yeah. But so trust is very essential and is the basis, I think, of the whole banking relationship. Should be premised on trust. So trust, confidence, in certain instances you can interchange them, which is why you find where there is no confidence, then the banking sector struggles, not just the banking sector, the whole of the financial services sector. So currently what we're grappling with, we also have legacy issues, back from 2008, even 2019 when we abandoned one-to-one. Those are legacy issues. They bend the hands of bank customers, insurance customers, we had policies, pensioners, and the like. The whole of the universal set of the financial services sector customers. So it's very critical. And as we were talking just right now, we are talking about our currency. Not about a bank, but our currency, national currency, and saying confidence and trust. So as he mentioned there back then, just in passing, something around the redemption of saying, if we do that, and then I've got $1,000 worth of, and I go to the bank, I want to redeem and get told the stories. Yeah, it then breaks all that trust and confidence.
Yes.
And in banking, there is such a thing as a bank run. No one wants to fathom such, because once a bank run comes or hits you, there are very few banks that can actually survive a bank run.
What's a bank run?
Bank run is whereby 100% or close to 100% or an inordinate proportion of your bank customers, depositors, come all at once, claiming or wanting to take back their deposits. So prudentially, you leave about 30% liquidity ratio and all that, and you're banking on the fact that on an ordinary day, not all of your customers will come and claim their deposits. If they do that, now we have a liquidity crisis. It can actually potentially destabilize the whole market, and the thing to fight it and attack it is from a whole market perspective. So I just gave this background because it's very important. And when you look at the mining sector, he will agree that now you see the informal guys, the artisanal miners, are contributing quite significantly, sometimes more than half, so they are very important. But when you then look at that sector, you see they've got varied needs and requirements. For example, the more formal and bigger mining corporates, their requirements are massive, they are capital intensive. So if you would like to give a loan, or if a miner comes knocking and looking for a loan, chances are it's $10 million. Chances it's 15, or maybe if it's not so much, maybe $5 million. Which is why you then see, in certain instances, banks then say, no, we can't attack this by ourselves, because there are also prudential limits and all that, single obligor limits, as an example. If they come looking for $50 million, now the Arabs will look at it and say, what proportion of your balance sheet as a bank is that, and can you give it and tie it in one borrower, as an example. So banks can do what we call syndication. I point this out, why? Because it's very important that our banking sector, our financial services sector, be able to take care of the requirements of the mining sector, because they are capital intensive, as I've said. Are we currently able to do that? I think fair enough. And syndication comes into play, as I've said, but perhaps the appetite it remains, and more could be done in support of NDS1 and Vision 2030. So when you look at the bigger corporates, naturally it's also a two-way street. Banks will ask you, you want $5 million US, okay, but where are you putting your deposits? So, and if you don't bring them, whose deposits would you want us to extend to you? Of course, there is financial intermediation, but it should be reciprocal. You also bring to the fore what you produce, and so when you come to the artisanal miners as an example, their requirements are not so huge, but their challenge perhaps could be informality, whereby if you want to do things strictly formal, inquire about certificates of incorporation and all that, even in opening a bank account, you'd have to loosen some of your requirements to accommodate them. That's also part of financial inclusion. Otherwise, you wouldn't bank them, or perhaps you wouldn't be able to extend loans because perhaps they don't even have any collateral that's secured. Even the bigger ones, sometimes it's difficult for them to give security for 100 million. So we also just find ways of accommodating them. So in summary, I think the banking and financial services sector has really tried to support the mining sector, but more remains to be done if we are going to attain NDS1, attain our $12 billion mining sector.
All right. And quite briefly, Mr. Simba, do you agree with that?
I agree with. I think he's put it very well. Trymore has put it pretty succinctly. They are trying to support the mining sector. Banks generally stand between the mismatch between the availability of short-term funds and the long-term needs of the mining industry.
Okay.
And I think they do that very well.
Okay. And interrogating the symbiotic relationship as well as a fluidity of the two sectors. We are carrying out a conversation here on Economics 101, interrogating all this and more. Please don't go anywhere as we go for a short break. We'll be right back.
Thank you.
We thank you, viewers, for staying with us here on ZBC TV. We are interrogating all things to do with economics here on Economics 101. Now, my name is Kurtley Gwindi, and in studio today I'm joined by Mr. Trymore Mhlanga as well as Mr. Simba Chinyemba, talking all things to do with banking and mining. Gentlemen, thank you for staying with us in the third and final segment.
Yes, thanks for having us.
All right, and let's get right into what we were talking about earlier. Statistically, we're talking about mining being a $12 billion mining economy. And where do we stand as a nation right now? I'm going to throw this question at both of you from your different perspectives. Perhaps starting with you, Mr. Simba. Is there any reflections that we are seeing right now of that particular landmark and milestone we want to reach?
Yes. Well, I can certainly give you the statistics of where we were in 2022, because 2023 we're still waiting for the output to come. But in 2023, the mining industry had reached 5.1 billion US dollars against the target of 12 billion by 2030. And we expected that it would grow probably by about another 10%. As we wait for statistics to know how much we have grown, I can certainly assume that we have gone, we're a lot further than where we were then. So I do think we are very much on our way to achieving that. I think there are some headwinds. At present moment, commodity prices are a bit depressed, except for gold, which is holding up. Thankfully, Zimbabwe has a diversified resource economy. But there are a lot of headwinds on platinum, on nickel, and various minerals that we rely upon in order to achieve that 12 billion. So while we are on track, I think we will see a couple of challenges certainly this year and next year before we start to see a resumption of the path that we were on in terms of growing the mining economy to $12 billion. I also want to highlight a very important event that has occurred, which should spur the mining industry even further, which was the removal of sanctions, of a majority of sanctions against Zimbabwe.
Oh, yes.
Which made it very difficult for us to have discussions with capital providers which for the much needed capitalization of the mining industry. If you read enough articles around the mining industry, you'll see that there was a shortage of capitalization in the industry. And Trymore mentioned earlier that a lot of the projects that we see in mining, they are huge and chunky projects.
Yeah.
So they do require not only local syndication, but international syndication with the local banks and local financial service providers. So I think that lifting of those sanctions, of some of those sanctions, will go a long way to that. And mind you, the companies that also have come off some of the sanctions list were predominantly in mining too. So they have also been released. MMCZ is no longer part of that list. Zisco still is no longer part of that list. So we should see a growth in capitalization and subsequently a growth in that economy.
Oh, yes. And Mr. Trymore, perhaps he's seen growth. Do you agree with those sentiments? Are you concurring with the idea that there is a growth trajectory, looking at the statistics and figures?
No, at the risk of sounding like we're just in agreement, but yeah, he is onto something. He pointed out quite factually. So 5.1 billion 2022, given a growth rate. Even if we do a bit of math and say that 70% around about of export earnings, and just juxtapose that to the national export earnings and all that, I think in that region of perhaps they've grown to around between 6 and 7 billion. But this has not been scientifically calculated. It's me just trying to do quick arithmetic. The commodity prices aspect is also important because 2024, the outlook is not so good for most of the major commodities, like even minerals that we produce, inclusive of gold, platinum, the PGM group of metals. I'll just then shoot off on another tangent, which is a favorite of mine. Value addition, beneficiation,
yes,
and all that. That would grow the mining sector exponentially. I like what you said about the value chain, because I also had that in my notes and in my mind, because in economics we have such a, this is economics 1001,
yes,
101
yes,
rather.
in the first
yeah, exactly. So there is such a thing called a multiplier, economics multiplier effect, whereby you don't look at anything in isolation. It has got downstream and all that. So value addition, as an example, would actually grow our mining sector more than we have even projected, because we are exporting in the main raw commodities, but we just need to value add a bit, and then even the whole economy will feel it. Our terms of trade will instantly improve, our balance of trade, our current account currently, when you look at it, is maybe slightly positive, but it is boosted by the secondary issues like our remittances and all. When you look at the trade balance, no, it's nowhere near surplus or equilibrium. So that would help. And then that would then naturally grow the economy further, not just the mining sector. So we need to put a bit more effort in that regard. That's my view there.
All right, absolutely. And as we wind up the conversation, can we now simply say our banking sector is stable, considering that people now opt to stash their money in back rooms? And we bring back that word again, which is a trust. Yeah. And as a banker, what has been your take with regards to that?
Thank you. It's a tricky one, but when you look at it, there are claims, perhaps unsubstantiated or unquantified, as to the real value of the informal sector when you look at it. So we have seen banking sector deposits grow quite significantly. So when you look at that in isolation, it would seem to point to an increase in confidence in the sector. But doing that perhaps could be a bit naive, because you then want to also look at the contra to say, these are formal deposits, they are increasing in this much, in this quantum, but how are they increasing in the informal sector and those that put their monies in NMB, which is a National Mattress Bank? So I think we still have confidence issues, and there is still a lot that can be done to tap into the financially excluded sectors. So to answer you shortly, there has been an improvement, but there is more out there. I wouldn't say exactly on the balance how do they compare in the formal sector, in the formal banking sector versus what's circulating under the mattresses and all that. But I would just say there is a bit more that can be done, but on the whole, it's positive. And if you're asking about soundness, there are metrics that look at banking sector soundness, capital, and all that profitability. Yeah, so the sector is sound.
Okay, the sector is sound, like you've rightly said. And perhaps moving on to your sector, Mr. Simba, your parting words based on this statement here that miners have been on the forefront of clamoring for value addition as well as a beneficiation of our minerals, but it seems everything is in vain since. Once that takes place, individuals within the sector usually do not benefit. What's your take on this as we briefly close up?
I obviously disagree with that statement. I like a book called Factfulness, which I would encourage people to look for and read, because it talks about how we need to bridge the perception versus reality gap.
Who's the author of that book?
I can't remember it off the top of my head, but I will send you a WhatsApp with it.
All right.
So, basically, why did I bring it up? Because if you look at where we are, people think there is no beneficiation going on. But take away the temporary reduction in activity due to headwinds from commodity pricing, and we had about 5 major projects that were actually due in this country, and all of them are along the beneficiation route. So we already beneficiate our chrome. Most of our chrome that leaves the country is ferrochrome. We could go further. Gold is about as pure as it can get, but obviously we can go down into jewelry and other things. But lithium, we are also already seeing quite a few projects to concentrate and move all the way up to battery grade. So I do think that there's a lot of beneficiation going on, and perhaps there's slight misconception about it not happening and therefore not benefiting the economy.
Okay, thank you so much. Solid answers and, of course, solid solutions here on Economics 101. We do thank you for gracing us and spending your time here on Economics 101, gentlemen. Mr. Simba Chinyemba, Mr. Trymore Mhlanga, it's a pleasure to have you here.
Thank you.
Thank
you for having me and us.
All right, absolutely. And yes, this has been indeed a fruitful conversation here where we have been dissecting, divulging, and of course diffusing some of the myths around some of these sectors. We are talking economics, we are talking mining, we are talking banking. And yes, Economics 101, your weekly dose of all things to do with programming that advances the nation, as well as trajectories and conversations that keep up with Vision 2030 and the National Development Strategy 1. Now from me, Curtly, Gwindi, the crew behind the scenes, and all of us at Pocket Hill Studios, it is a pleasant viewing, and God bless Zimbabwe.